If you're a business owner and you're looking for a reliable way to trade, you should have already noticed that the market is a lot wiggling around and it might cause to have a lot of losing trades. There's an indicator that is called the anchored VWAP. This is this violet line, what you can see here on my screen. And this is where stop placements gets very interesting, because when placing the stop under, while seeing that the market does green candles, which shows us that the market is pushing up, usually the stop placement will work. And to show you proof is that I have your students' results ready. You can see here how they trade with the anchored VWAP with the money management. Here you see tool anchored VWAP here. On the other side here also tool, it says also here anchored VWAP. And the trader is adjusting $100 a trade, as you see here. I'm going to make this one bigger so you can see it here on your screen. And for a winning trade, the trader here does, as you see here where my mouse is, $900. Or here, for example, $460. That means when holding every trade at $100 on average and getting $500, $900 as you see there, then it can be that we have 2 winning trades of $1,360, but 3 losing trades of only $300. Or the other student here, for example, who trades a lot the anchored VWAP with 11 winning trades of $5,000, but 9 losing trades of $900 with a profit of $4,180. In this video, I'm going to show you trade examples, how to use the anchored VWAP with the money management, how to get a risk reward ratio of 5 using a simple 3-step method using the anchored VWAP. First of all, when to use the anchored VWAP and what is the anchored VWAP? The anchored VWAP is the volume weighted average price, and investors are using that to enter the trade in a retracement. That means we always place this tool on the biggest structure low here, as you see here. We can place it higher here or even up here, but this is where it doesn't go that efficient. It's more important to place it always on the bigger structure low here, for example, or down here. And then once the market touches it, comes back, usually we find here a reaction that the market starts doing when trading up, lots of green candles. And this is where it gets attractive. For trading down, of course, it's going to be the opposite. That means we place it on the highest point. We see the market is pushing down. And then here, for example, when the market does here lots of red candles, touches it in the back, this is where it gets interesting. But keep in mind, the anchored VWAP is only working when the market is less trending, is more of a consolidation phase, as you see up here, where it's very hard to catch the trend. We wait until the market is touching the anchored VWAP, see a lot of green candles with this 3-step method. But when the market is trending, as you see here, for example, usually when looking to the left, we always look, where do we see here bigger structure highs? For example, this is a bigger structure high up here. And then this blue line here that you see here, when we see that the market is pushing up and does here lots of green candles, even though you place the anchored VWAP, the market very often will not touch the anchored VWAP. In this case, we don't need it. We may need a trend following trading strategy, but we say usually 80% the market is usually in a consolidation phase. That means mostly you will find trades with the anchored VWAP. So we figured that out. If the market starts to make consolidation phases on the same day, then the market will continue to make consolidation phases, and we should then be able to use the anchored VWAP and start them with the 3-step method. Step number 1, we understand always the market has goals and targets where the market likes to run to. That means bigger structure highs, bigger structure lows, for example. That means we make the chart small. We look to the left, we see, for example, from this structure perspective here, a bigger structure high. I'm putting here a blue horizontal line. We see then this bigger structure high that I draw it in. And we see here smaller structure highs, as you see here, these blue horizontal lines that I'm putting in. Second step, once we see that the market does lots of green candles, as you see here, and length in that direction, there must be structure then that have been done, created. We place always the anchored VWAP on the lowest structure, or even from the biggest structure perspective, one structure higher. I'm going to draw you an example that you can see this, and I hope you can see also the structure in the chart. Let me know if you can't see too much in the chart, if you need an example video to it, down here in the comment section under this video. So when you have the market and it starts to print lots of green candles, now you have your biggest structure low. Sometimes you have a medium structure. From the size, you have here medium structure low. And if there are a lot of green candles still, we can place also here the anchored VWAP. And then once the market touches it, this is where it goes very interesting. That means we let the market push away with lots of green candles. We see very bigger structure low is down here. And here we have a higher structure. We place the anchored VWAP there. And then now you see that the market is literally touching here our anchored VWAP. We need to check here if I placed it here correctly on this candle, if the market is going to touch here the anchored VWAP. It's going to touch here. It's going to go here very close on the anchored VWAP as you see here. And the target is usually to place the stop placement under the anchored VWAP. That means entry after a green candle once the market is nearby. Stop placement under the anchored VWAP. Now here's the thing. This only works if you see that the market is pressuring a lot. And there are these two things what we can do that once the market comes back to the anchored VWAP. The first one is we look for length. How long in length did the market do? That means, for example, I'm going to show you this one. I'm going to take a tool like a rectangle and I'm going to show you the length what the market did from top to bottom. You see this length is what the market replicated here, and then after green candles the market goes up. That means usually if the market does the same length back here, this green candle, it would be good that the market pushes up. But when you place here the anchored VWAP as we just had it down here, you see here it would be down in this area here. When you look at the structure, and this could be a bit tricky, you see here that this is also maybe a bigger structure high for some people. It looks like this. So you have 0.1, you have 0.2, you have 0.3. And somebody maybe puts it here, the anchored VWAP, and then you will see here now this green candle that is going to confirm us an entry. But the biggest problem here is we have a lot of red candles. That means what we want to see is that the market starts to make lots of green candles, or it does something that is called a higher low. A higher low is something very efficient. If you, for example, let's just take, please, a demo account first of $3,000 and $100 a trade of adjustment. When we trade futures, we can do that with leverage, entry, stop placement tight on the candle, color switch. That means red and a green candle. I'm going to show you this one. And then to take profit, aiming for the biggest structure high. That means when placing here number 3, the anchored VWAP as you see here, seeing that the market does this retracement in length for once, second, third time, it will be this one. Here's the first green candle, but the anchored VWAP would be here where it is right now. Then this can be a good trade. But what talks against it is that we have here so many red candles, what is not good. Instead, we wait until the market does a red and a green candle, and then a higher red and a green candle as you see here. We call this a higher low in structure. And it's very important if we take, like, for example, $2,000, $3,000 divided into 20 or 30 trades, that means a $100 trade. To adjust $100 after the red and the green candle closed, the green candle must be small. Stop placement on the green candle or on the red candle. Entry after the green candle closes, right where the green candle is closing. It's closing always at the top. And then aiming for one of these bigger structure highs. And you can see here the RR, that means the risk reward ratio is 5. That means now when putting enough leverage in the game, that means you can see on the top right, position 2, 1, right? We can adjust here to $137.50 for the single trade, or even we can adjust this one here to $100 as is here with the tighter stop placement. It depends always on the position size. With leverage, each position size is a leverage of $300,000 US. For this, we need $400 margin using brokers like Iron Beam, AMP Futures, EdgeClear, for example, are brokers. Iron Beam, AMP Futures, for example, are very good brokers with very good support that I know. And you can see when entering the trade after the green candle, when placing the stop placement under the green candle, then, and we aim for this target, you see there's a risk reward ratio of 6.88. That means when adjusting $100, including commissions, we would have around $680 of win just for this single winning trade. So that means we enter the trade, we have a tight stop placement, and then we aim for the biggest structure high. This is the one method how to trade the anchored VWAP. The second method how to trade the anchored VWAP is to wait just until the market does a couple of green candles. By the way, you see here 1, 2, 3, 4 green candles, and you see here 2 red candles in between. We just go to another example, and then I'm going to show you this one. Like here, for example, the market starts here doing a lot of green candles again. Please keep in mind, when the market starts to make 4 red candles or 5 red candles, as you see here, lots of red candles, this is where it gets dangerous. We can also let the market push away. We place now the anchored VWAP down here, because here the market starts pushing away. And sometimes you will not see that the market is touching the anchored VWAP. But if you now measure again the lengths here, as you see here, as you see here, they're almost similar, or as you see here. And then within the same length what the market did the first, the second, the third time, the first green candle down here, we can now place the stop at the anchored VWAP or even at the green candle, stop placement here. And aiming for this high, you can see there's a risk reward ratio of 5.8. We can adjust the $62 to $125, so that would be a $725 trade. Or we just place our stop a bit larger. We go with a smaller position size, adjust this to $100, And we need, of course, also to put our take profit higher. In this case, this is a 1 week VWAP. If you're interested on how different VWAP works, let me know in the comment section. And you can see here, there would be a risk reward ratio of 5 for this trade, or the higher color switch here, as you see here, has also a risk reward ratio of 5, only trading to this second blue line here. As you see here, we don't even need to trade to the 1 week VWAP. Here's the thing, and this is something what's very important. The trade down here seems maybe more better, but you see here also a lot of red candles. The higher low, as you see here, the red and the green, and the higher red and the green candle confirms you market pressure. You can also see, and this is something what's very cool, when you see that the market did this length in like 15 minutes or something, the next 1 or 2 hours, you can imagine that the market continues to go in that direction. As you can see here, the market does this length again in this direction, and then it starts to make again around the same market move in the direction. This is the main reason why the anchored VWAP works so good using the S&P 500 futures, because it's a market that is running for 30 minutes up to 7 hours at some days. You don't need to find it every day. But if the market starts making lots of green candles and shifts, and you can see on the left side there's a bigger structure high, then the anchored VWAP is something what can help us a lot with a higher low or a lower high to trade in that direction that the trade will better work. And very important, money management is always the #1 thing.